Hello everyone. Welcome to the June edition of Horizon VideoZine. I am Akshay Bhagwat from the Technicals and Derivatives desk. Well, as we talk and shoot this video, the good news is that the markets were on the verge of hitting the all-time high levels. Well, it's been a highly volatile few days for the market. And if you look at the turbulence which we have seen lately in the Nifty Index, it was mainly the political changes, the election outcome, which kept the market participants on the edge of the seat. Now, clearly, if you look at the positioning ahead of the election outcome, if we do a quick recap of how things fared in the past 3 to 4 days, clearly the markets were heavily positioned as per the exit polls, which clearly gave a verdict for the BJP-led NDA government to clearly cross the 400 plus mark. Well, the street was in for a surprise, and the election outcome day really was more of a massacre for the bulls in the initial part of the trading day. Well, that's behind our back right now, and as we see today, post the heavy volatility which we have seen in the last 3 to 4 trading sessions, we are back at the all-time high levels. Now, one of the key developments here, when we look at what happened, the FIIs were actually very pessimistic on how they started off the June series. The long-short ratio, which we very keenly track in the index future segment, was as low as 11%. You can say long positions compared to around 89% shorts. So that's a pretty strong way to start the series for the June month on a very short note, or a sell mode for the FIIs. So clearly the FIIs were very not keen on participating in a big way, because somewhere or the other, it feels that they were not very keen on taking a very strong bullish bet ahead of such a major mega event which happens once in 5 years. Now, one more important parameter which we always discuss when such big events are lined up is the volatility index. You might be surprised to know that volatility index, which historically crashes post the event, it did take a very massive upside, almost 31% from the 20-21% on the election day. So that was in for a surprise. The option writers really had a hard day on the election outcome. But finally, now, as I may put it, everything is behind our back. Well, sanity returns back to the system. The normalcy is back, and as I may put it, अच्छे दिन वापस आ गए हैं. So to take it ahead, now what we look at is, before we see how the markets are positioned from here, we will do a quick chart check of how the international markets are placed on the price graphs. So if you look at the Dow Jones 30 index, it's broadly in a very strong uptrend. It's just that the last couple of months have seen a bit of a consolidative phase. So if I were to look at levels on that index, it is the 38,000 support and the 40,000 resistance. This is the range in which the Dow Jones has been confined in. And again, recently we did see a good bounce from the 38,000 support zone. So the belief is till 38,000 is held. Really, you have no reason or concern to be worried about how the US is faring, at least from the market's perspective. Also, if you look at the crude oil, it is very much in a range. Kind of, it's cooled off a bit to $75 odd level, and even the 10-year US yields, which we commonly track for the health of the broader global markets, is around the 4.3% mark. So everything looks pretty much under control as we step forward into the June series. Now, before we take a quick technical and derivative check as to how the positioning is for the Indian markets, one thing is we would like to see how the participant-wise open interest is positioned in the derivative segment and also on the cash market side. Now, one caution or which we would advise here is FIIs still are broadly short on the Indian markets or are very lightly positioned. Now, if you look at the cash figures month on month, I think it is the second consecutive month in the cash segment where the buying numbers are not getting in. There is a lot of outflow in the cash segment, especially from the FII side, and things also don't look much bright from the futures and option side, where the long short ratio, although we started from around 11%, as I mentioned, it's improved slightly at 17%. So the big question, I may rather put it, going ahead is, with the Nifty almost at the verge of hitting all-time high, do FIIs improve their long bets on the Indian markets or not? Do they come back in a big way? That's a multi-million dollar question which all the market participants would be keenly following too. So we'll keep you updated and posted on how this data plays out, because it's a very important data point we would like to follow as we move ahead. Now, you would be surprised to know that in this entire market momentum, or the loss of momentum, rather, I may put it, in the last couple of days, clients have held on very strongly to their long bets in the index future segment as well as in the stock future segment. So somehow, the client's side of the market, or the participant wise positioning, is very broadly placed on the buy side of the markets. And if you look at the kind of momentum the market has regained in the last 2 days, clearly the clients have been on the right side of the market. So that's a very important point, that clients have possibly got the edge over the FIIs in the last 2 to 3 trading sessions. Now, moving on as to how the technical or the graphs look, how healthy is the market on the graphs of the Nifty Index, which I would be taking you through. Now, Nifty Index had a very choppy session in the last 3 days, especially in the beginning of the month. But the good part is that time and again it's bounced from important moving average support levels. Now, some moving average supports which, as an investor or a slightly positional trader, which you need to be keenly keeping a tab on, is the 200-day moving average. Roughly it is at 21,150. That's a simple moving average, I may put it. The 100-day moving average, which is more of a medium term outlook, is roughly around 22,200, and a 50-day moving average somewhere stays around 22,450. So for the June series, 22,500 is somewhere where the base is building up. Now, even if you kind of compare this data with how the derivative segment is playing out, a lot of put writing bets now have positioned themselves at the strikes of 22,000 and 22,500. Now, the good part is the volatility index has stabilized. It has got to around 15 to 16% from the high of 31%. So clearly that has meaning that stability is back in the system. The option writers are making it big now because premiums are still there. The writers still have a lot of juice in the market to go for their writing bets, and 22,000 and 22,500 is the strikes which the option writers are preferring to write for the June series, and that's the expectation that somewhere or the other a bottom is in place, and now market should be looking forward to conquering new landmarks. Now, where are the call writers positioned when we look at the derivative segment for the Nifty Index? The call writers are positioned at strikes of 24,000 and 24,500. So deep out of the money calls are still getting a lot of speculative long bets, although it is a writer's market, but still, considering the huge price volatility which we have, somewhere or the other, it is attracting the buy side of the option traders in this volatile scenario. Now, if I would take you through how the Bank Nifty Index is set up. So Bank Nifty Index too has recovered well. We are almost around 50,000 as we speak, and although Nifty is on the verge of hitting its all-time high mark, Bank Nifty has still some more room to catch up with its all-time high numbers. So 51,000 is one resistance which I see for the bank index, but from here on, if the indices has to perform, I think I would be more comfortable taking a bet on the banking space, because there is still some more room to catch up in the bank index. So it's a good recovery, a healthy one. And if I again were to see how the moving averages are placed for this bank index, the short term 50-day moving average, which holds special relevance for the traders, is positioned at the levels of 48,200. So that's the number you need to keep in mind. That's an important support. Even if I were to kind of validate this with a recheck as to how the options positioning is, a lot of put writing is kind of moving around 45,000 and 48,000 both for the weekly and the monthly expiries. So that does give you comfort that the buying demand or the support area somewhere or the other works out around the 47,000 to 48,000 mark. So till these support zones are held, expect Bank Nifty to hit its all-time high levels and further move possibly to the zone of 5300. That's the projection which we have for the June series. So to sum it up, the technical health of the market is strong. It's a good market, although last few trading sessions have been choppy, have been volatile. It's a good market, especially for the traders, because volatility is what you look forward to as a trader. Even for an investor, his journey, although has seen highs and lows in the last 3 days, a lot of opportunities has presented you good levels to re-enter the market. One positive way I would put it is that the froth somewhere is out from the system, because stocks which were highly overpriced have somewhere cooled off in the last 2-3 days, and really it does present you a good opportunity to hunt for good names in stocks where the potential from a long term or a slightly medium term looks or works well for the Indian markets. Now, which sectors would you look forward to? Now, clearly the way the market is, one thing which I observed here is that the PSU theme somewhere has seen a hit on the election day. So most of the PSU names were rather swelled up on huge buying interest, because that was the theme before the election outcome. And somewhere profit booking hit the PSU sector hard. And when it did recover the last couple of trading sessions after the election outcome, the recovery did not match up or live up to the expectations as some of the other sectors did. Now, really, which are the sectors which did well in the last couple of days after the election outcome? If I were to name them, it's clearly the defensive bets. That's IT. Now, IT traditionally in the last 3 months has been somewhere a subdued sector. A lot of IT names have been laggards. It was the PSUs and the banking or the Coal India or the BHEL, as you name it, were going all guns blazing, and suddenly they had a big correction. Now all this money flow is slowly moving into these defensive names. You can say that IT names have seen a good recovery from their support base. Charts had been suggesting that they were on the verge of a positive reversal, because they were heavily oversold considering the loss of momentum which they had, and now they are looking as good lucrative buying bets if you were to position yourself in this market for the June or the July series. So a lot of IT names should be on your radar. Still there is a lot of juice left in these names. Even if they do see some dips, that would be excellent buying opportunities to participate in these IT names, and that's the way ahead for the Indian markets. Secondly, surprisingly I may say, it is the FMCG or the consumer durables which have really come out with a bang. Now, because traditionally if you look at the price behavior of most of the stocks, they are known to be pretty steady stocks. They have been hibernating for long, as I may put it, but they have come out of the blue. They have kind of staged move of almost 8 to 10% in a very short time frame of just a couple of days. So clearly the money is chasing these consumer durable names. So keep a watch out for defensive bets in case you are not really comfortable with the volatility in the current market. IT and FMCG is the way to go if you are slightly defensive in this current market. If you want to take a really aggressive bet, it has to be banking. Now in the banking names, we would encourage you to go for the private banking space. The PSUs really had their fair share of gain in the last couple of months, and somewhere or the other we believe the mid cap to the small banking names would be the ones which would be the beneficiaries in the next round of momentum which the Bank Nifty would have. So watch out for the private banking space in case you have a more aggressive stance on the market at the given juncture. And lastly, not to forget, have the monsoon basket or the monsoon theme now, because as we enter into the month of June, a lot of chemical and fertilizer names have already started performing well. So probably it's more of a cyclical move which you normally see in the month of June and July. So there will be a lot of trading interest in these names from the stocks which have a significant exposure to how the monsoon behaves. So that would be the sector which should be on your watch list. Now, just to conclude, I think the markets are now on a stable footing. Really, worry is behind our back. Now you should start adding good names to your portfolio, and new grounds will be conquered as we move ahead. Investing is the best way to approach this market. SIP can also be the best route, considering the fact that in some volatility, in choppiness, you might get good re-entry points again in some of the sectors and stocks which I mentioned. What can be possibly the events which you would like to note for the month of June as we go ahead from here, which might have some impact on the market? Yes, first is with the new BJP government back in power, they are not as strong as they were before. So they did not get the majority as a standalone party. So there are some glitches here and there as to how and who will get the ministry. So that will kind of play on the market participants' minds for the short term. The second thing is the budget in July. So depending on which ministers get which kind of portfolio, really the next speculation which the market would be kind of anticipating is what will be the SOPs which will be announced in the budget. Will it be a populist budget, or will it be more business friendly? That will be the question mark, and there is where you will have some bit of volatility in the market, or the speculation element as we move ahead from here. Not to forget the global concerns. At the time being, at least I may put it, a lot of global concerns have cooled off. But really, here and there, you have those news kind of, just keeping the grounds slippery on the global front. Mainly, it has to be the Israel and the Hamas conflict. You never know when things can escalate. So that's the piece of news you need to be having at the back of your mind. And lastly, monsoon updates from the IMD would be keenly watched because that's the theme. It's a cyclical theme with which the markets work on in the month of June and July. So keep a tab on this news flow which I discussed. So thanks for listening me out, and I wish you happy investing times ahead from GM Financial. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.